Good morning, good morning, good morning. It is finally Friday. It is the 27th of February, all day. This is the Morning Blast with myself, Ryan, and of course, Mr. Michael Brown. Usual caveats apply. Nothing on this podcast is trader and investment advice. This is, for those of you who don't know, a very, very candid market-ish related podcast. We don't apologise for swearing. There's no editing at all that goes into this. So, yeah, put your fingers in your ears if you're easily offended. Michael Brown, how are you?
Well, very good morning to you, Ryan. Good morning, everyone. Very happy Friday. We've made it to the end of another long week. And yeah, I think we're all sort of very much looking forward to the weekend, given the roller coaster ride it's been.
Indeed. Are you at home today? Are you working from home?
I am indeed, yes. I'm
A little
sat
bit
at my desk.
from an amazing day out with me?
No, not at all. Not
That's
at all.
all right.
I'd take issue with two things in that. One, the idea that you think I'd be hungover, and the second, that word amazing. Where did that come from?
Oh, come on. It's me. Do you know what? Jokes aside.
Yeah, it was nice to see Tom Wiseman and a few others, but
Thanks. But do you know what? Like, jokes aside, like, I'm a little bit miffed that I haven't got a hangover.
Why?
Because I really should have a hangover.
Oh, right.
So, yeah. Anyway, moving swiftly on.
Well, just the fact that you got the temerity to moan about that, it suggests you might drink too much.
Oh, what a great word that is. What a great word that is. Anyway, speaking of temerity, let's speak to our dear, dear friend Clive Lambert over at Futures Tech for an update where markets are and what levels to watch. So obviously yesterday, S&P gave back all of Wednesday's gains, so it continues to chop without giving any clear sell or indeed buy signals. The Nasdaq did the same, similar outlook. The trend is sideways for now. It's a bit of a rosier outlook on this side of the pond over the Euro stocks and the FTSE futures, both yet again all-time highs, which we have definitely been saying quite a bit recently. DAX continues to lag, same as that. We always keep saying that. Bund futures rallied further after Wednesday's hold of the Marabouzi support at 129.52. It got to 129.99. 129.99 overnight, where sellers returned and responded. Watch for 129.70 to 72 on the weakness today. Cable, that saw red, that held the 200-day simple moving average again. Gold posted a doji, small body, long wick, a bit like myself. Silver saw dip buyers doing their thing above 84.74. Platinum caught a strong bid overnight with palladium making similar noises. In the London Metals Exchange, base metals were all bid overnight with copper eyeing 13,500, moving away from the 13,030 level that we've been watching earlier in the week. Brent, that posted a long-legged doji, apparently. Not like me. So confusion.
Very much not like you.
So says you that was last night telling me that I needed a stool to get up onto my other stool.
Yes, that's right.
So confusion continues to reign in oil. Henry Hub Nat Gas saw weakness and is yesterday is gunning for the gap below 2.766. We found buyers just in front of this level yesterday, so keep an eye on that. This side of the pond with the TTF, the Dutch gas, new front month with messier chart than the outgoing March contract. So see what happens there. Take a step back. EU carbon market saw red yesterday to keep us sideways with the bears. Soybeans, though, dipped back to 1145, where buyers responded. This resulted in another long-legged doji to temper our bullishness vibes. But that's it from Clive. Thank you very much.
Very good. Thank you, Ryan. Thank you, Clive. In terms of where we stand this morning, then, it was obviously, as Clive alluded to, a bit of a risk-averse day yesterday. I think two kind of main catalysts for that. One was really almost bang in line with the cash open yesterday. We saw markets come in and quite aggressively selling down some of the tech names. Nvidia at one point was down as much as 5% on the day, despite having reported, I should say, some pretty solid earnings after the close on Wednesday. And of course, not helping matters was the frankly ridiculous amount of geopolitical noise that we had. As we called on the podcast yesterday, there were plenty of geopolitical headlines doing the rounds, and all of them were very conflicting, which initially drove crude lower, then back to flat, then higher on the day, then lower on the day. This morning, we trade pretty much where we were this time yesterday after all of that choppy mess. So that says it all about trying to headline trade crude in a market like this. In terms of those talks between the US and Iran, they were described as intense and very serious. But it was noteworthy that, according to the Omanis, who have been sort of mediating the whole affair, significant progress was made. That's their wording, not mine. And that these talks are due to resume at a technical level next week in Vienna after consultation has taken place in the respective capitals. So what that effectively means is Witkoff and Kushner are going back to the US, the Iranians are going back to Tehran, and then they will go back to Vienna next week, having had some feedback or fresh orders and instructions from their leadership. At the same time, of course, the military build-up in the Middle East continues, the US continuing to fly fighter jets into the region. The second aircraft carrier that they've sent to the Middle East, the USS Gerald R. Ford, that has this morning arrived off the coast of Israel. And in the meantime, there have been plenty of reporting around President Trump continuing to be briefed in terms of military options for the Middle East. Israeli media were reporting yesterday that Trump is due to convene his senior advisors for detailed discussions on Iran at some point today. Notably, within these reports, they said that the deliberations within the White House are focused not on whether a strike is going to take place, but on what the scope and potential targets of that strike could be. Again, take it with a bit of a pinch of salt. We've got so much sources reporting doing the rounds. It is quite frankly ridiculous at this point, but it kind of goes without saying that there is the potential for some fairly significant gapping risk over the weekend, depending on how all of this evolves, and also the scope for participants to trim their exposure to riskier assets such as equities as we move into the weekend as well.
Just on that.
Oh, go on.
I know it's very boring to say this, but it is something that we're going to see. Well, we have seen for the last few weeks, and we're going to probably continue to see this until any proper action takes place. And also, as our dear friend Clive Lambert just rightly pointed out, it is month end. So there's a lot of positioning shenanigans are going to be going on. You know what happens at month end. If in doubt and you can't place a move, just blame it on month end flows.
Yeah, exactly. Or people front running end of quarter next month. That's
there you go.
Besides the geopolitical developments on the trade front, the South China Morning Post, they were reporting yesterday that apparently preparations for this summit between President Trump and President Xi, which is due to take place in early April, those preparations are, quote, faltering as planning gaps unsettle Beijing. I would just caution, though, that their sources for this were former government officials familiar with the planning process, which frankly sounds ropey as fuck from a sourcing perspective, but there we go. That wouldn't have helped risk appetite either. In terms of data yesterday, we only had the weekly US jobless claims stats, both the initial and continuing claims prints effectively a rounding error away from where they've been over the last month or so. The initial claims number at 212,000 in the week to the 21st of Feb, continuing claims at 1.833 million in the week to the 14th of Feb, and that week, of course, coincides with the survey week for the February non-farm payrolls data, and we'll be getting that data this time next week. Excuse me. Besides that, we had a 7-year Treasury sale in the United States, which stopped on the screws at 3.79%. In the corporate sphere, Ford, I wouldn't usually cover this, but Ford announced a recall of 4.4 million vehicles in the United States yesterday. This mainly centers around the F-150 pickup truck. Vehicle recalls are very common for, minor issues or whatever it may be. It's not that common to have 4.4 million of them recalled, so potentially one to watch there.
One thing that I'm not aware of what the answer to this is, so I'm interested if you are. The way cars are now very much more kind of tech-based, when we hear some of these massive recalls, it's over-the-air kind of software updates. What is the actual issue with these cars?
Well, I was hoping that you were going to ask me that. Apparently, it's an issue with what happens when they attach a trailer to the pickup truck, which can mean that the brake lights stop working.
So I have no idea whether or not they can fix that with a tech update, but there you
go. And nor do I, and I find it quite amusing that the fellow without a driving license is trying to opine on this.
Say, look, I like to be driven.
Oh, yeah. What is it? I can't think of the word now. You have a chauffeur. Anyway, moving on. Yeah, quite. It's sticking in the corporate space. Netflix, the whole Netflix, Warner Brothers, Paramount, Skydance saga, looks like that's coming to an end because Netflix have declined to raise their offer for Warner Brothers Discovery. I think Paramount, Skydance put in a bid of $31 a share for Warner Brothers. That now does leave Paramount, Skydance as, well, basically the only contender to buy the company. So it's pretty certain that they are going to win that bidding war now. Netflix shares have reacted very, very positively indeed. They were up as much as 15% in after hours trading yesterday. A few reasons for this. One is Warner Brothers Discovery aren't actually in that great shape. So Netflix have kind of almost got out of jail free with this one. Secondly, there could be the potential that Netflix receive a breakup fee now that the deal doesn't go ahead. And thirdly, because they're not doing the deal, Netflix have resumed their stock buyback, which has also been a positive catalyst for the firm in after hours trade. You'd obviously expect them to open in the green later on today. And lastly, just before we move on to the UK political situation, the head of the World Economic Forum resigned yesterday. Again, not something I'd always mention. The reason I do mention this is because it's important to view this in the context of what's going on at the ECB, because President Christine Lagarde has refused to quash these reports of her early departure, despite having been asked probably 5 or 6 times about it now. And one of the rumours that did the rounds previously was that she is being lined up to move to Davos and run the World Economic Forum. Well, the job of running the World Economic Forum has just opened up, so we will pay close attention to any indications that she may be on her way. But that is all on that front. I suppose we need to talk politics again.
We do, unfortunately. We have to talk UK politics again, which is something that we talk far too much of. But of course, it was the Gorton and Denton by-election yesterday, something that we wish we didn't have to talk about. But there we go. But it was Labour's worst nightmare comes true. Labour came third out of 3, really. Green Party's Hannah Spencer wins with, was it 40.7% of the vote, with a majority of 4,402. I think total votes was just shy of 15,000, whereas Reform's Matt Goodwin came second with 10,500-ish. So Greens are more ahead than basically polling and also betting markets had it. But yeah, so as we said yesterday, Michael, well, I jokingly said, yeah, what's worse for Labour, Greens coming first or Reform comes first? And you said, well, actually, the worst thing for them is to come third. And lo and behold, they came third.
Yeah, absolutely. Very much, the worst of all worlds for the Labour Party, to be honest with you, and certainly for Prime Minister Keir Starmer. I've got some stats here from the excellent Helen Thomas at Blonde Money, who put together a nice note on this morning. This is the first time the Green Party have won a by-election, but it's also the 6th biggest Labour majority that's ever been overturned in a by-election. And of course, this is in a seat that the Labour Party have held continuously since 1935, which gives you an idea of the scale of what we've seen. But I don't think it's just Labour that are going to be troubled by the result, because I'm pretty sure the Conservatives end up losing their deposit. And it's actually the first by-election where neither Labour nor the Conservatives have placed in the top 2 ever in the electoral history of the UK, in those contests where both have stood a candidate. So I think it's
just to give just give the listeners a guide of how bad it was for the Conservative Party. They got a whopping 706 votes, which was 1.9% of the vote share. And they did indeed lose their deposit.
Yeah, not particularly great at all. Obviously, the Labour result or the implications for Labour are going to steal the lion's share of attention, because Prime Minister Starmer's position was pretty perilous as it was, and this is only going to make it more so, because recall, Starmer was the one who rushed the timeline for the by-election. Starmer was the one who blocked Manchester Mayor Andy Burnham from standing in the by-election. So again, very much calling his judgment into question. I think there's a few few other implications here. The interesting one is for reform, because I think a lot of people have been saying, this is a disappointing result for Nigel Farage and the Reform Party. I think I'd probably disagree with that, considering that this seat, if you look on a general election basis, it's into the 400s in terms of where it will be on their list of target seats. And to come second, yes, it's a by-election, all the usual caveats, but to come second, I think is still a pretty good effort from the Reform Party. So I think really this, as we said yesterday, heightens the likelihood that we do see manoeuvring against Keir Starmer after the local elections. Again, I don't think there's really any incentive or desire from Labour MPs to move right now. They're going to want Starmer to own the spring statement next week, to own the local elections, which, well, judging by what we saw last night, could be even more of a bloodbath than we were expecting. So I think really it's just a case of we were expecting political risk here in the UK to ramp up through the spring and summer anyway. I think the result that we've seen just sort of crystallizes those expectations, to be honest.
No, exactly that. I think, today, as we said yesterday, today will be like dust settles and people start getting their opinion pieces out. I think it'll be this weekend where we get, the weekend paper will be, I'm sure, full of editorials. And it'll be, we'll know Monday where we kind of lie with Starmer and kind of how all things are going to play out. But I'm not, I think you agree with me here that I'm not convinced that anything really is going to happen until May still. But yeah, we'll see what happens.
Yeah, I think there's a risk that this sort of changes the mood music, for want of a better word. I think, Labour MPs, certainly backbench Labour MPs who, as we've said before, there's no real incentive for them to behave in the first place, because there's frankly not enough jobs to go round. But secondly, this will just sort of crystallise their worst concern, their worst nightmares. I mean, if you're a Labour MP, well, Gorton and Denton, a Manchester suburb, you would stereotypically say is one of the safest Labour seats you can imagine.
So Manchester, Scotland, right?
Exactly. So if you're a Labour MP in any other part of the country, you're suddenly going to be looking over your shoulder going, when we go to the polls, I am going to be out of a job. And your political instincts, if they have any, are going to kick in and say, what can I do to keep open the prospect that I still have a job? And if that entails a change of leader, they're not going to be afraid to voice that view. Certainly when I think a lot of Labour politicians will almost be taking the view it can't really get much worse than this.
Well, exactly that. And if you are kind of in a seat that you think you're probably going to lose, the best thing to be, probably the safest thing you can do is turn on your leader and say, look, it's nothing to do with me, he's a twat. Words to that effect, anyway.
And I think that's actually an interesting point, because, up to now, we've been very much focused on the idea that it's going to be the cabinet that tells Starmer he has to go, effectively.
Yeah.
But there is, of course, the potential that actually it's the Labour MPs, the backbench MPs, that tell Starmer he has to go. Even if he still, ostensibly retains the support of the cabinet, it could very well be a case where actually enough of the parliamentary Labour Party turn around and go, we have no confidence in you, that pushes him out the door. The other one to watch, of course, is the trade unions, because they are massive, well, primarily financial backers of the Labour Party. They've never really been huge fans of Keir Starmer, if we're being completely honest. And again, they've got absolutely no incentive to support him at this moment in time. So it'll be really interesting to see whether we see anything from the unions in the media over the next 48 hours or so along the lines of, government needs to change direction or change leadership or whatever it may be.
And this is it. And because they are the paymasters of the Labour Party, what they say carries some considerable weight.
Yeah, absolutely. So it's going to be very interesting to keep an eye on that. Lots of moving parts. The market reaction there hasn't really been one, to be completely honest. We did see gilts trade very slightly softer at the open in knee-jerk fashion, but we've pared those losses back to flat on the day across the curve now. I don't think we should be surprised that there hasn't been a huge market reaction.
Just weren't expecting much.
Yeah, exactly. I think it's very much more a case of this is just cementing the base case that participants already had, which is that we are going to have quite a lot more political chaos coming through as we move into May and then after May the 7th.
Yeah, exactly that. Exactly that. Just a quick note before you give us the lowdown of what we've got to expect today. Obviously, it is month end today, so shenanigans are in play. Obviously, as well, it's the weekend. US Iran, that's still there, so we could see some positioning ahead of that. So, for me, it's definitely one of those days where you kind of want to just sit out the way of it and try and just avoid trouble.
Yes, sorry, I thought you were going to say something else.
No, no,
Yeah, no, you're absolutely right. It's one of those days where markets could do things that are frankly illogical and a little bit odd because you've got a lot of competing forces where you've got that month-end rebalancing, as you said. I think these days probably a lot of that gets done in the run-up to
yeah.
month-end, not
It's not
necessarily
like
on
they're
the
doing it
last
until the
day.
close on a Friday.
I mean, if you are, you've done something wrong, let's be honest. And certainly in the FX space where you're operating on, T+2 value dates, we actually did most of it on Wednesday.
Yeah.
But regardless, there could still be some of that going on. You've obviously going to have on the geopolitical front a day full of headline noise again, you would certainly expect, but also a day where participants are trying to hedge what they think might happen over the weekend. And that's not just crude, that's gold, that's equities, treasuries, basically across the board. So yeah, I think it's very much one of those days where if you don't have to trade, you probably don't really
Go
want to
down
be
the pub.
involved. Oh yeah, exactly.
Yeah, and with jokes aside, but anyway, if you aren't going down the pub, what is going on today?
Indeed, yes. If you're not going down the pub or if you're not having an admin day, as Clive Lambert has just suggested you take, then there are a few bits and bobs on the docket to keep an eye on. This morning, we get regional inflation figures out of Germany. These are due at the top of the hour in about 8 minutes' time. It is worth noting that we've already had CPI data from both France and Spain this morning, and both of those did come in marginally hotter than expected and up on the prior as well. So potentially some upside risk for those German regional inflation numbers. And then we get the Germany-wide metric that comes at 1 o'clock this afternoon, which is expected at 2% on a year-on-year basis, which would actually be down from the 2.1% we saw in January. But again, we have seen a skew higher in those other Eurozone regional prints this morning. Across the pond, we've got a few bits and bobs on the data docket. At 1:30, we get Q4 GDP from Canada. The Canadian economy is set to have contracted by 0.2% on an annualized quarter-on-quarter basis in the final 3 months of the year. We also get PPI figures from the United States at 1:30 this afternoon, although do note that this data is for January and it is, again, slightly delayed due to the government shutdown. In any case, PPI seen at 2.6% on the year. That will be down from the 3% prior, and it could help shape expectations for the January PCE report. That is, of course, the Fed's preferred inflation metric. Awkward times of pause there. And that data is due in the middle of March. So again, delayed because of the bloody shutdown. We also get the latest Chicago PMI data from the United States this afternoon. That's due at 2:45 London time, although as always, the data is out 3 minutes early for M&I subscribers. That index expected at 52.1, modestly lower from the 54 that we saw previously. Besides that, the central bank's speaking calendar is a pretty light one. We are due to hear from BOE chief economist Hugh Pill at lunchtime. Of course, he is by far one of, if not the most hawkish member of the MPC at this moment in time. And besides that, of course, do bear in mind the potential, as we've already mentioned a few times, for some quite choppy conditions throughout the day and also potentially some gapping risk over the weekend, depending on what happens in the Middle East. And of course, recall that gapping risk works both ways. Yeah. Obviously, if we were to see a dramatic escalation, including the potential for military action, crude is going to gap considerably higher. But given that the market is trading with a geopolitical risk premium priced in, as we saw last week, if nothing happens, then there is the potential for crude to trade a little bit softer as the new trading week gets underway. But for this morning and for this week, that's all from me.
Exactly that. Michael Brown, a pleasure as always. Thank you for the couple of beers last night. Shout out to Tom and Clive. Yeah, whatever you're doing today, everyone that's listening in, have a good one. Whatever you're doing this weekend, have a fantastic weekend. And we'll see you all bright and early